I'm going to show you one astounding chart in this video, and then I want you to put your thinking cap on. I know you're smart. Put your thinking cap on and see if you agree with me. What I think this means for the economy. What I think this means for what the Fed's going to do. What I think this means is going to happen to the price of silver and gold and the precious metal mining stocks. Because the way I see it, we're in a situation that we just can't get out of in the United States of America. And I know, on a side note, that it's even much, much worse in Europe and Japan, just to name two. Not to mention the developing world, which is experiencing extreme financial stress right now. But let's get back to this chart. What the chart shows is the total interest payments that would need to be paid by the U.S. government as interest rates go up. Remember, our wonderful politicians here in the United States have racked up almost $30 trillion worth of debt over the previous decades. $30 trillion worth of debt, okay? As interest rates go up, as the Fed is fighting inflation, right? Supposedly fighting inflation, interest rates are going up and up and up. Now, this gentleman, the happy Hawaiian, put out a chart that shows what he thinks is the Fed pivot indicator. And again, this is the total U.S. debt multiplied by like an average of the 5-year bond rate and the prevailing rate with the Fed, okay? And it shows how over time, when it reaches a certain point, that's when the Fed pivots. But why do they do this? Well, they do it because interest rates and interest payments get to be too high. They do it for a number of reasons. But the point in this video, and my point, is that as rates go higher, right, if we get to a, let's say, 5% interest rate, and remember, a lot of people think we'd have to get to like a 10 or 12% interest rate to actually fight inflation. But if the Fed continues on this hawkish path and we get to a 5% interest rate, that would be $1.5 trillion per year in interest payments. Now, that's a lot of money. But you've got to compare that to the total income of the U.S. government. They only brought in like $3 trillion a year over the last few years. That would mean that at 5% with $1.5 trillion in interest payments, they'd be paying out half of the money they bring in just in interest payments alone. That is untenable. That means it's not maintainable. Mathematically, that doesn't work for a country, for a company, for you, for me, for anybody. So it's inevitable at some point that the Fed has to give up, because the only way that they could raise rates that high, okay, and have that high of interest payments just on that 5%, that $1.5 trillion, the only way the government could pay that and still run all of its other military, all the social programs, everything else, is if the Fed was buying debt from them, if the Fed was printing money and buying debt from them, which would be a form of easing. So there's no way out of this situation. When the market wakes up to this, which they will at some point, right? Unless I'm wrong. So I'm curious to hear what you say. But when the market wakes up to this, that, yeah, sure, the Fed can raise rates, but the government can't pay their debt. The Fed will have to print money to buy the government debt. Well, they'll be right back where they were, right? Like a goofy circle. I won't use the word, like a goofy circle. We'll leave it at that. That will spell disaster for a lot of things in the economy, but what it will mean is a continued increase in inflation, a continued increase in real tangible assets, right? I mean, you got to think about this, guys. This situation would be like you or I living in a house that we got a mortgage on that's like equal to the value of the house. We got a bunch of car debt. We got a bunch of student loan debt. We got a bunch of credit card debt. We have medical debt. We got all kinds of debt tons and tons of debt to the point where we're making $80K a year, but we're paying out $45,000 a year just in interest on all the debt that we have. It's untenable. Okay? We would need a bailout, right? Which is what the U.S. government would need if things continue down this same path. So it's going to be really interesting how this all plays out, but I want to hear what you have to say. And by the way, thank you for watching this video. Thank you for being here in Ron's Basement with me. That's important to me. You're important, and I'm going to look forward to seeing you next time. You can subscribe, give the video a thumbs up, turn on the bell notifications, and just share it on Twitter, anywhere you like. You have my full permission. Have a great day, and I'll see you next time.